Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alconin, along with Brianna Valesky, and we have G. Tommy Lackey Jr., founding partner and CIO of the Barber Lackey Financial Group. Tommy, how you doing during this earnings season?
Doing great, guys. How are y'all doing this
Good,
morning?
good. Could you tell us a little bit about the Barber
Good.
Lackey Financial Group?
Yeah, Barber Lackey Financial Group is just a family firm that we founded about 15 years ago in '99. And basically, because we all had been in the financial planning side of the business and realized that there was more need for attention on the investment side. Too many planners out there don't really pay attention to the investment side nearly as much as we feel maybe they should. So we started Barber Lackey, and a registered investment advisor, in which we do our own portfolios. We build our own different structures for our clients' assets, and I pretty much take care of all that for the firm.
All right, and then you've developed your little baby called the Nitrous Scan. Can you tell us about it and some of the key components?
Yeah, the Nitrous Scan is basically the idea of buying strength. And most people look a lot of times at buying strength. I'm a big relative strength person on many different measures, but people look a lot more long term. But what the Nitrous Scan is the Nitrous Scan is a little more of a short term gauge, and it shows it's when it's a little more technical, but basically it's when the 9 moving average on RSI, not on the price, but on RSI, moves above the 60 level. It a lot of times will coincide with acceleration in a trend, even if that move already looks extended. Now, of course, you still have to have your risk management. You have to be careful, but it's just something we found, and I learned this from Andrew Cardwell, who is really the RSI guy, knows more about RSI than anyone.
So you're
He taught
looking.
me this years ago, and I started really playing with it.
So basically, what you're
Go ahead.
looking is if there's a move and it gets to a certain point, you're not looking to fade the move. You're saying, hey, this it's gotten to this level. You're looking for a continuation of the move up to if it gets over 60 RSI, then you get in and you wait till it gets to 90, 95, and then you dump it. Is that would that be a simplistic
Well,
way of looking at it?
not really not really for me, because one thing about scans for me is I'm a chart guy. So all the scans really do is draw my attention to the chart, and then the chart takes it from there. I mean, if it really looks ridiculous or I don't see any more upside at all, I'm not going to bother with it. But what this does is this shows me something that has started accelerating higher in its move. Sometimes at the beginning of the move, sometimes at the end. So you still have to pay attention.
How long
But
do
what
you
I
need?
found
Is
is more
this is
time than
this
not,
is this for day trading, swing trading, one, two, three
um,
days? Where
it's for both, really. I don't like to. That's another thing I don't like to do. I don't like to categorize my scans for certain trades. I think the trader has to choose that, because we all
okay.
have different styles, and if you don't follow your style that fits you, it's going to be real hard for you to win. So that's why I don't like a lot of some of the subscriptions and things like that that give you 5 different ways to trade something. You've got to really own that trade, in my opinion, to be successful. All I'm doing is basically saving you the time of trying to find it. From there, you own it. But I do believe, yes, this is more of a short term to swing type trading setup. But yet I've found quite a few from time to time that it comes at the very beginning of a longer term move. And I think I told you guys that last time is I start with the short term move and the short term chart, but as that continues to technically improve, I'm not necessarily going to take it off if the technicals continue to improve on the higher and higher levels. So go from intraday to daily to weekly.
Right.
As long
So
as they're improving, I don't
yeah,
want to leave the party.
right, right, and that's the way a lot of the trades that that work out for me. If they're if they go my way, the longer I'm in them. If they start to go against me, I stopped out. It's usually
Hmm.
pretty quickly. So,
Exactly.
all right. So what is on the
Exactly.
nitrous scan for today? It looks like you're looking at the biotechs here. Amgen. Walk us through your Amgen potential setup here.
Yeah. See, Amgen's one is a good example. Is everybody's looking at how bad Biogen looked, and now Amgen comes out and it's got a chart here that just continues has been basing for since last fall, a little less than a year, and now it's moving out the top. So again, this is just a traditional classic breakout setup. If it can get over the highs here, you can either do it right away and put your stop a little lower, maybe under the 20 SMA, or if you're a shorter term guy, you can basically use the false breakout type setup to stop yourself out. You're a long-term conservative guy, you give it the 2 days to hold above it before you buy. Again, this is a large enough breakout on this weekly that, the long-term conservative guy can play it just as much as the short-term swing trader or day trader can. It's just a matter of setting yourself up correctly. But if you look at that weekly chart and the way some of the indicators are rolling up, it just moved back above 60 on RSI, which is a classic helps the bull range idea, saying that it's still in a good trend, even though it's been sideways for a while. And it's just a great looking setup
So
here.
you're not
I
in
mean,
it
a lot
yet.
of
You're
the
not in
short.
it yet, Tommy. You're
Go ahead.
not in it. You're waiting, huh?
No.
Wow.
Well, I don't talk about specific trades and all of that, but I would not be in it here.
Okay.
I would not be taking the trade until it goes above this.
Wow.
And I'm
Woof.
sorry about that, guys. One of the things being an RIA is there's a little different set of rules for me on
Oh
how I
no,
discuss specific trades or not.
we understand. No, definitely don't want to run in afoul of compliance here.
Correct.
All right, moving on here. You got a couple other stocks you're looking at on the Nitrous Scan. RSG. Talk about the potential setup here.
Yeah, RSG is one that it's actually ran for a couple of days. And this is a good example to where, a lot of people will look at this and say, this thing's already ran too far. Don't buy it here. I would look at this and say you're right at another breakout point, so we still got to watch it. But there's nothing wrong with either making it break out or seeing if it does settle for a couple of days. That's the other thing that I think people make the mistake about with some of these scans is they feel they got to use it that day or it's over. And that's one of the reasons on all my scans I put FinViz links at the bottom.
Mm-hmm.
Because a lot of times it's smart to go back and maybe check a couple days ago and hit that link again and see how things are setting up. And it just gives you an easy way to review. But here, I really like it because the waste management area has been hot recently, especially with the comments from the
Oh,
waste
okay.
management CEO talking about acquisitions and stuff. And this is in that area as well. And then again, the chart setup just looks rock solid here.
Wow, you're a brave man buying some of these stocks. Okay, what about Log M here? That is live. What is this?
Log me in.
Oh, very good, Brianna. Log
Yeah,
me in here. It had to gap and go. Couple days of consolidation here. Just another consolidation to move higher.
well, again, yes, I think you're in the same position to where you watch for that, but this one you're in a $74 stock, and you could put your stop right below the gap up low.
Mm-hmm. Okay.
And so you're so close there. So yeah, you could have a small tight flag here and move higher, but again, it comes down to the risk reward in the trade. And even though it does look somewhat elevated with these signs that oftentimes tell me it can go further, then as long as I have a pretty tight out, I still would consider the option
All
or the
right.
idea.
Now here's one that pays a nice dividend. DHT, nice divvy payer, which is kind of a scary thing sometimes, but on the verge of a breakout here, DHT Holdings. You're waiting for it to get above, what is that, the $9 level that's been the problem?
Yeah, I think that's where you're looking because that's where it peaked back at the beginning of the year. It hopped up above it the next day and then reversed quickly. So I wouldn't necessarily have to wait all the way till that high of the next day, but that $9 level, a good even level, gets over it. And this is in the shipping industry, which has been seeing some improvement and some more chatter
Okay, so you
here
put
and
a
there
whole,
about it, kind of
yeah,
getting back in people's views.
yeah. You're taking your technicals. You're finding some fundamentals to work for you. So I definitely see your strategy here. Another one here on your radar, MDRX. Let's talk about that. You said it held 14 on the fade and refusing to close the gap so far. Tell us what you like about MDRX.
Yeah, I think this is another one that again it's a little more difficult because of where it sits. But the fact that 14, if you go back to I believe it is early November of last year, late October, early November, right before it gapped down, that was kind of its high area, and then it came back above that at May June and held above it, and that's kind of what it played as its testing level before it went back down. We get the gap up, and now there we are again. How many times are we going to visit this level? Well, this time we're visiting from the top side and trying to hold it. And so that polarity, basically old support becoming resistance and then support again, then resistance again, shows that this level is important. So you could take a shot there, and you could either put your stop under the 20 SMA right around 1389. Or, you could wait till it gets over 1450 again if you're more conservative. But it does look like it's shaping up here. And, that gap up that faded is fine, and that scares a lot of people away. But if I am correct, let me look at one thing real quick. I believe we are also looking at about a 9% short float in here.
Okay. Now the next one here, and this popped up in the chat a little bit earlier. Baidu here. Ooh, boy, got spanked yesterday. I think Linda Stingle in the chat was looking maybe to try and scalp this thing from the long side. We did come up off the lows here, 170 level. What's your take here on Baidu? To me, I don't know if I could. I mean, it bounced off the low here. A lot of people probably still stuck to stock. I mean, when I look at these kind of moves, yeah, you might be coming back up, but there's a whole host of people that are underwater. You're gonna find some company selling on the upside. Any takes on Baidu?
I looked at it yesterday, and the one basically 60 area was kind of the middle of that last consolidation at the beginning of 2014 on the weekly. So the 160 area I think would be a minimum, but really it looks to me like it could go down to the 140s. And the one thing I've seen, and I can't remember who it was, but someone used to have the rule that when something gaps down and gets crushed like this, wait 3 days or wait till the third day.
Right. Okay.
And I've found myself in the past, I've tried to pick these off on the first day or second day, and it just doesn't seem to give me what I want too often. I mean, it can certainly go straight back up, and some of them do. And when they do and you're not in them, it's frustrating as can be. But more than not, in this market, especially with people being a little more timid, things are taking a few days down here, base for 3 or 4 days before they start coming back up at a minimum. And so I would probably wait and let it settle a little bit before I figured out which direction was next.
Okay, and what about Biogen here? Boy, oh boy, the stock really got clobbered. And what do you think? Is it time to step in here and find a bottom in Biogen?
I think that's a great example right now, aren't we? It wasn't yesterday day 3, so now we're on day 4. Again, it just takes a couple of days to figure out kind of where things are. I definitely watch it since yesterday it closed right at the lower Bollinger Band. Watch it today and see if it can continue higher over 325, and maybe try to start getting into the gap. But, again, you're still running into a scenario to where you've got the same kind of situation. This chart already looked like not good
Okay.
prior to this. And you've had this phenomenal biotech run, and one of the biggest names out there can't take part. I think you could just, if you really want money in biotech, I think you could find a better spot.
Yeah, like Gilead. Okay, moving on here. Also on a short candidate here. Tell us about PII under 135 or yesterday's lows. What are you seeing there, Tommy?
Yeah, I just saw that, and just basically it looked to me like, you've got a pretty big level there. It's not only is it if you look on the weekly chart, it goes back quite a while. Not only is that the level all the way back to last July that's important, but that was also the apex of a large weekly triangle right before that broke out higher. So you got a lot of importance right here at this level. So if it loses that level, then I think we head down into probably the mid 120s, and then we see where we go from there. It's right on the verge. It's already lost its daily RSI bull range, so it's in a bear range on RSI on daily, and the weekly is at 39 right now, which means if it turns up here, great, it held support again. And if it does, then take a shot.
Okay, that's
take a cheap shot because you're right here at support.
People that I always like to are more favor the long side. So let's just go back to a couple of your setups, showing some good relative strength on the long side here. And let's see here. EMC, you said, coming off some failed breakdowns. Talk to us about EMC.
Yeah, EMC. It's a couple of y'all's regular guys. I think JC does a lot with failed breakdowns, and so does Scott Riddler. He calls them, I think, his RDRs. But you got a similar setup here to where in March, April, it was down here at these levels, bounced up and came back down, broke 25 late last week, and then reversed strong, and it's been up strong on volume since then. It's at the downtrend line on both the daily and weekly right now. It gets over this line, then you start looking at you know 29-ish as your next bigger level, 28 to 28, 29. I mean, you got some stuff back there, but you're seeing it improve well enough that I think you've got a good shot. You've also got a big MACD histogram on the weekly that fired strong, and then the RSI had roughly held 40 during most of this pullback on the weekly, which means it was trying to stay in the bull trend, even during pullback from an RSI standpoint. So I think I think you get continuation from here, and you've got some opportunity here.
All right,
Got to get over that trend line.
gotta close out here with Twitter. What are the nitrous scans saying? Blew up last night, rally off earnings, back down. It's just the day after earnings, you just let this thing trade for a couple days. What are you seeing in Twitter?
Well, the nitrous is having nothing to do with this. Now, I am developing one that's the reverse of the nitrous, which basically is for meltdowns. I would say Twitter would probably be closer to that one at this point. But it's just an area to where this is really a big level. This 30 area is a huge level. I think getting down here to 3250, there's a good chance we could go test that unless someone really gets in there. And all bets are off if it goes below that, because that was the lows.
Yeah, they're
I mean, it's
basically
not been
treating
below
it.
30. So it goes below that, then
They're basically treating it like it's going out of business. Like Twitter is gonna
yeah.
cease to exist.
And I don't expect that, but when you're dealing with a price chart, you have to let the price chart lead the way. I mean, we've seen a lot of good companies that got down into 30 cents range, and then in crisis modes, and then a few years later they're back. Well, you don't want to ride this down to 30 cents. Not that I'm saying it's going there, but it's just a scenario to where you've got to let it find its footing here after that earnings. I believe that you're probably going to see some people come in. It just has too much coverage, in my opinion, or too much out there, in my opinion, opportunity and exposure for it not to find something to work.
Okay, good words of advice for Tommy Lackey Jr., founding partner and CIO of the Barber Lackey Financial Group. Great information. Thanks for joining us. We'll speak to you again soon.
Thanks, guys. Greatly appreciate it. Look forward to next time.